And we are live. Welcome, everybody, to another edition of the Coach's Playbook. I am JD filling in for Jack. I'll do my best to do this with my magical Chicago accent, as he once called it. Joined here by the usual cast of characters, Hogue, Mick, Dan. How's everyone doing today?
Great. Good to
Doing
be
good.
back after a nice long Thanksgiving week off.
Top
Oh, yeah.
notch. Little stretched out in the midsection.
Did you guys celebrate solo, or did you go rogue and have some family over?
We did it with immediate family and then friends and neighbors for an outdoor bonfire.
Oh, that sounds like fun. That's
Yeah,
a
it
great
was a good time.
Yeah.
We just
socially
had,
distance, standing
had
around a
pretty much the
fire.
four of us.
I'm
Fully
sorry, what
immediate
was that, Hogue?
family.
So we pretty much just had the four of us, just my wife and two kids, and and the dog, of course.
Of course,
Lacey.
dogs are
Yeah.
people. They're part of the family.
Definitely a much smaller gathering this year, but still a nice time. Got together with family.
Good.
Excellent. Well, today we will be talking about pivot points. It's been a popular topic around here. We released a blog with it with our weekly kickoff email just the other day. If you took a look at that, we're just going to follow up on that. But first, before we get started, how about a funded trader shout out, Mick?
Thank you very much, JD. Shout out to Dirk Hinman. He is up about $1,500 right now. Trade the NASDAQ. I feel like
Nice.
every time we do these shout outs, everybody's trading the NASDAQ.
It's been the popular product for sure.
It has it's attractive to see it moving the way it does. It gets some excitement around it, and everyone, you think about it every time you turn on the news, the stocks that people are talking about, Tesla, it's always a tech stock that leans them into and then you get into the NASDAQ, and it's a nice product right now.
Yeah, definitely. John, go ahead.
I'm just gonna say I'm too old for it. Gives me heart palpitations and moves too quickly.
Well, it's all relative. We've got most of our traders in the funded accounts. The majority of the volume we're doing is in the equity indices, and I'd say of the equity indices, NASDAQ's definitely the most popular. At $5 a tick, it swings around quite a bit. I know that's attractive to the retail traders with the quick moves. As far as what you're saying, you're a little worried about it, John. I know you're a SPOOS guy, an S&P guy. Think about the tick values a little bit there. It's $12.50 a tick versus $5 a tick, so it's
Sure.
still a little relative there.
Do we know we got a lot of people trading the micros or just the minis?
There's some micros, definitely some micros products. I would say it was kind of good timing for the CME to launch these micros products, because when they launched them, not long after, we had some significant ranges and volatility in the market. So I think that the micros allowed, not just our traders in the funded accounts or even the combine for that matter, but traders all over the world to participate in those very high risk markets, only because they could take up to 1/10 of the risk with the micros contract versus the minis contract. So it's definitely been, I've talked to people that prior to that volatility might trade a 5 lot or something in the E-mini S&P, and they scale back to 3 micros contracts, so significantly cutting their leverage. Totally a smart thing to do. I mean, when the markets are going wild, that's when you need to scale back, because you can get an equal bang for your buck if you're right trading smaller than you would if you without taking the increased risk of the mini. So
Yeah, I agree with that. I think they're great entry level products also.
sure,
I would agree. It's a
Taking
lot of
everybody
fun. You can save on costs. You can manage that risk a little. What I like about it is it allows you to control risk, other than in the minis when you're going, let's just say, S&Ps, it's either, you're up and down 12 some dollars when you add one or take one off. And then as soon as you get into the micros, it allows you to go even smaller. You can tweak it a little bit, and you can trade, equivalent to 1.5 of the minis, and you can really kind of scale things in a lot easier way, I think.
That's
like
definitely some of the feedback that I get, people that, they don't want to go all in, all out. They want to, scale in, scale out. It definitely, is something for those traders.
And I like the idea that the risk, if there is something you want to hold for a longer period of time than just a day time frame, much easier to pallet the risk in the micros than the minis, and certainly the bigs. Boy, I can't believe the amount of money we tossed around in the bigs, man, back in the day. Oof.
That's all you had.
Yeah, that was it.
That was it.
As much as I love falling down the rabbit hole with these conversations we have.
What are we here to talk about?
We could ramble I know we could sit here and ramble for hours. But let's get back on topic before we lose everybody's attention. Unless I bet people are enjoying that more than they're going to enjoy the pivot point talk anyway. So pivots, there's a textbook definition for what they are and how they're calculated. In my experience, put into practice, pretty much anything you see in your chart that you think could be considered an area of consolidation, I think can objectively be considered a pivot point. But everyone's got their own idea of it. Who wants to jump in first? How about Hoag? What's your opinion on pivots?
Well, I've never been that much of a user of pivot points. It's, just another line in the chart that's going to help sometimes and not going to help sometimes. There's a simple calculation. There's lots of different ways to calculate the pivot points. It's more the support and resistance lines that are provided outside the pivot number that I think more people tend to focus on. And just speaking personally, it's not a tool that I've been able to find that useful. And again, that's just me. There's a lot of different ways to look at markets, and there's a lot of different opportunities, and nothing is going to work every time. Some things work for a while, some things don't work for a while. I don't even like to use the word work when it comes to finding levels that are useful. It's another, the one thing I do like about it is an ability to limit the risk. If you're going to be depending on pivot points and support and resistance lines provided by those pivot points, it's a way to limit the risk. As far as finding them useful in my history, not so much. And I think that there's a really good reason, at least in my mind, why I don't look at them that much. It's because everybody does. A lot of retail traders depend on pivot levels, as well as the support and resistance lines that are provided. And I think the more people look at it, the less powerful it is. There are going to be times when they're going to provide great opportunities, times when it's not so much. Just not my tool.
Yeah, and we've talked about that before. The sort of the how much stock you really put into support and resistance levels. I tend not to put a whole lot of stock into them personally. I think you get a better feel for where the battles are going to be fought during the day just by tracking volume. And yeah, like you said, everything works sometimes, but nothing works forever, right?
Right.
Yeah,
How about you,
I got a couple things that I wanted to caveat with what each of you kind of said. First off, like, the one thing I struggle with the term pivot points is when you hear the term pivot, you think it's going to stop. Just like in any sport growing up, hey, here's your pivot point. You put your foot, you plant, and then you turn right back around the other way. I think we've heard Mick say this about 1,000 times. Support and resistance is only defined in hindsight when you look back to see where the market reacted. What I do like about them is I like seeing where people are looking. I do know John said it, countless retail traders look at these pivot points. When I look at it, I get an opinion of, okay, I know everyone's looking here, so maybe I can find some opportunity on a little bit further down, or because I feel like a lot of times when I hear a trader say, well, my stop got hunted down to the tick and then it turned around, it's because they're looking at these common areas that everyone's looking at. And if you can look at it a little bit differently, it allows you to maybe say, okay, this is going to help me define my risk a little bit more definitively. I can adjust things based off of this. I prefer finding those levels more on my own as opposed to computer generated. But again, everyone, looks at them. And so we did drop a link for a pivot calculator in the chat there. So make sure to check it out. Speaking of chat, I just want to say hello to a few people in here. Nick, Garapati, and Murph. Garapati's asking, do we have CPR in TS Trader? I believe it should be under indicators that pivot points are in there. I don't have my TS Trader open in front of me. John might.
We do have pivot points on TS Trader. Yes, for sure.
Okay. Yeah, they are in there. So that's my opinion. I think they're great to look at to get an idea of what everyone else is looking at. I think it kind of, for me, that's what I'm looking at them. I'm not looking to execute the second it touches because we don't know if it's going to turn around or it's going to kind of be a springboard and the market's just going to blow right through there and accelerate in that direction.
Yeah, pivot points are under channels under the indicator tab.
Thanks, John.
Thank you, Hope.
Well, I kind of want to go here and I want to touch on something Dan said, something John said, and then kind of give my explanation on what give my own opinions on pivots. So, John had talked about how these pivot points are information that everybody's looking at. I think that can be good and it can be bad. Whether it's retail or any other participants, I think, there's certain times, and I wouldn't really say so much pivot points being the important ones, but, there's always, certain levels that everybody in the world's watching, whether it's, a 50-day moving average, a 100-day moving average, a 200-day moving average, a swing high, a significant swing high or swing low, the last price that was traded, the highest price over the last few months. So I think it's good to be aware of, areas that people are looking at. Danny, and I'm drawing a blank on what he had mentioned that I want to talk about now. Shucks, it's too bad we're on live where we can't just hit pause.
Did it have to do with the name pivot?
No, it didn't. Actually, now I'm remembering. So it was regarding, you mentioned about people, getting stopped out and feel like they're hunting for stops. When it comes to stops, I have a couple opinions that are 100% correct on stops. I'm this
so
confident about them.
It's fact.
These are facts about stops, people. Usually people who get stopped out on a regular basis, they're doing a couple of things. If you are trading, taking a small risk for small reward, you're on a shorter time frame, you buy something and you risk, 5 ticks on it. Like chances are, if you look at the charts, like there's a lot of noise, price bar overlap. You're going to get stopped out extremely often and very regularly. Also, if you're someone that I like to call, chasing the carrot, if the market's going higher, we're rallying, and you're buying new highs, there's going to be pullbacks, maybe not in the next few minutes, but I mean, people that are always buying new highs, once the market pulls back, you're probably getting stopped out where you should be putting the trade on. Same thing if the market's going down. If the market's, selling off and you're selling, getting short new contracts in the hole, once we have a little pop, you're going to get squeezed out of that trade if you're not giving yourself a ton of risk. Also, this is a fact. I mean, on any given day, I could tell you where a lot of stops are going to be. No, I don't have any software as to where the stops are going to be, but you think about this. People put buy stops above the previous day's high. People put sell stops below the previous day's low. For those people that are looking for a change in direction, they don't want to see range expansion go the opposite way against them. So there's always going to be sell stops on the low side of a swing high or swing sell, excuse me. There's going to be stops on below a swing low, and there'll be stops above a swing high. Like I said, you'll have stops above the previous day's high, previous day's low. And guess what? After the stock market opens and you have an opening range, people that get short during the opening range that want the market to sell off, they're going to put their stops above the opening range high. And same thing with people that are buying during the opening range that want the market to go higher. They're going to put their sell stops below that opening range. So, I mean, someone who's been around the markets and looks at, there's common places where stops are going to go. But going back to, and again, I haven't gotten to my pivots yet, but going back to where stops are, if you're risking only a little bit, you're going to get stopped out a lot. I did it when I started trading. I get stopped out all the time. And, it's not people probing for your stops. So as far as pivot levels go, I'm kind of with John. I don't use pivots at all. When I was down on the floor, there were always those guys that came and walked around with, the pivot levels for the wheat and the corn and the soybeans. After all the trading went to the computer screen, there are always people on your email lists that are sending you pivot levels for those. And, what is this number? What does it mean? It is a calculation, but I've never really paid too much attention to these pivots. It's always for me been something that someone else provided me with. And over time, I've learned I want to do my own analysis. I want to say, I think this might happen at this level and watch to see what happens at that level. And then whether what I think happens does happen or it doesn't happen, I'm the one that came up with the idea of what might happen around there. And I get to analyze my own opinions and whether they played out or not. It's really difficult to have Hogue give me, so here are these pivot levels. And if we touch a pivot level and pivot and bounce back, or we go through it, how do I interpret that? And how do I learn from that? So that's just kind of how I feel about pivots. I know there's something that a lot of people watch. I don't use them. I've never used them. They've just been something that I looked at every once in a while, but without doing my own homework, I don't like using other people's information. If other people's information worked all the time, sure, I'd take that information and use it to make money. But when you get information from someone else and try and act on it and take risk and it doesn't work out, you're the one at fault there.
Yeah, I think that's a great point, Mick. I mean, I think all of us are on the same page of they're interesting to look at, but we all basically just said we're going to do the effort ourselves to find the levels that we want to look at and not rely on just something that a chart can place in or we can find on a website. Because you're spot on, Mick. It's that accountability thing, if I were to talk to someone and they said, well, I just kept shorting, that second pivot point. Why? Well, why? Well, it's a pivot point and you're short it. Well, you got to have some validation behind that. You can't blame the pivot level that you got on your chart. You have to do the homework, put the effort into finding those levels yourself. And then you can learn to trade off of that a little bit easier because you know what you were looking at to define those levels.
Yeah. And if you are trading off of pivots, make a pivot one tool in your tool book. Usually when you put a trade on, you want to see not just one thing that tells you to do something, but you want to see one thing and then another thing. And as I like to call it, like you should have at least 2 or 3 stars aligning where you're saying, hey, this is, I'm seeing this, this, and this. They all tell me long here is a good call. And if you only have one indicator telling you to do something, in many cases, the odds are going to be less likely that that'll play out. You want to see a couple reasons for your decisions.
Yeah, that's a great point. You should definitely have multiple indicators pointing at the same trade before you put that trade on. And circling back just for a second to, we were talking about stops. One of the hardest things to do for especially new traders is trying to think like an algo, because it is real, predator algos do exist. I'll disagree with Mick there that there's nobody out there hunting for your stops. Well, a conspiracy theory or whatever you want to call it. But predator algos do exist, and they're out there specifically to hunt down pressure points for smaller retail traders and squeeze as much weak money out of the market as they possibly can. And that's.
I'm sorry. Go ahead, John.
Oh no, please go ahead.
And they are specifically hunting the FOMO traders, the traders that are getting in near levels, whether they're pivot levels, whether they're confluent levels in unrelated studies, whatever it is. Those algos they're hunting the stops of the people that are in too early. They're the ones that are getting into those positions when your stops are hit. Think about that. You get into a situation, you get into a trade near a pivot level and you're in too early, your stop's probably going to be where you should enter anyway.
I'm glad, JD, you mentioned something about that. John, you followed up with a little information. What I was saying is about people not, trying to stop you out. I mean, nobody cares about your 1 lot or your 10 lot. That being said, if I just mentioned, like, where the stops are. They're above the previous day's high and above the previous day's low,
It's
or the
obvious
opening
clues.
range. Now, it's really easy to say, hey, look, we tested, we had this opening range. We went a little bit lower. Now we're trending higher towards the opening range. Ooh, we're coming up to the high of the opening range. I think that we're going to take out the high of the opening range and expand up. Well, I can start aggressively buying, and I can park a sell order up there a little bit higher above the opening range. Maybe I accumulate 100 contracts, maybe 1,000 contracts. Not saying me personally, but if you think that we're going to take out a level where we'll get a goosing, where stops will get triggered, well, market order stops, they snowball the market and they accelerate things. And if I can jam that market in that direction and cause some of these stops to get triggered, all the while I've got an offer resting up above, and say, yeah, I'll sell to your buy or market orders, sure. And I mean, that is, that I totally agree with that, and it makes sense. I mean, I can guess where the stops are, and if I want to help try and move those to trigger them, but there's nobody saying, ooh, JD's long too, and he's got to
No.
stop it, at 6. Like, I'm gonna pound this market and get JD shaken out. That's not how it works.
Nick, the pit trader in you is showing right now.
Well, I think we rambled off topic again quite enough.
We should talk about stops next week.
Yeah,
There
let's
we
do it.
go. Next week's topic, stops.
Making a note. And on that note, who's got a quote for us? Who wants to close
I
it up?
do. So I had a different one, but all of this talk kind of made me shift gears a little bit. It comes from Colin Powell. I thought it was a really good one. There's no secrets to success. It's the result of preparation, hard work, and learning from failure. So I thought that was pretty good. You can't just slap the pivot point on there and expect that it's going to work every time. Do the work, put in the effort to find what works for you, and execute based off of that.
That's such a good one to tie to this business.
I would agree.
Agreed all around. Thank you, Dan. And thanks everybody for tuning in. We will catch you next week, where maybe we'll be talking about stops.
And everybody, leave your comments below if you'd like to see JD permanently take Jack's seat at the table here.
I hope that's
Just
a
kidding, Jack. Just kidding.
Well, thanks. I'll take that as a compliment. Thanks, Mick. All right. Have a great rest of your week, everyone. We will catch you next time.
Thanks, JD, and